We have some pretty big Tesla stock news today. Despite this, Tesla is down almost 1%. According to local news, Tom Zhu mentioned that the FSD launch in China will be, quote, soon. Tom Zhu visited one store and one sales staff that answered the question when FSD will be released as above. So there is no question, FSD is entering into the Chinese market soon. This is the news that back on April 29th caused Tesla stock to rally over 15% in a single day. When FSD enters the Chinese market officially, the take rate's probably going to be higher than over here in the US, and it seems like it may be easier to get things like robo-taxis actually operational. It seems like the Chinese government is more willing to allow robo-taxis to operate. There's already been a couple of cities in China that have expressed their willingness to start being the testers of robo-taxis and to expedite the launch of robo-taxis. But yet, Tesla's stock is still red today. So what's going on? RBC has cut their price target on Tesla to $227 from $293. They do this as the brokerage adjusted its pricing assumptions for the automotive company's robo-taxi business based on a sum of the parts methodology. The two main changes we made were lowering our per mile pricing assumption and adjusting our revenue share assumptions, said analysts Tom Narian and Brad Erkinson in a note to clients Wednesday. The pricing reflects the economics for a fleet operator to generate a 15% IRR. The brokerage expects there will be a number of software providers, fleet operators, and OEMs making robotaxis when it reached mainstream global usage, likely in 2040, while a new legacy service providers such as Tesla will dominate the app space. For this reason, we see service provider revenue share at 25%, exceeding software and vehicle at 10 and 15% respectively. We still see robotaxis being the biggest driver for our Tesla valuation at 52%, followed by full self-driving at 27%, Megapacks at 15%, and cars at 6%, the analyst noted. Tesla, should mention, has an average hold rating and a price target of $85 to $310. RBC did indeed maintain their outperform rating on the company's stock. Fed Kashkari says the economy keeps throwing us curveballs, which are challenging. He also said that bringing inflation down to 2% may take years, and that's not exactly what the markets wanted to hear. We also had the Swiss National Bank that cuts rates by 0.25% down to 1.25% after cutting rates already in March. They were not expected to cut rates. So hawkish comments from the Fed, surprise rate cut in Switzerland, and yeah, that's not really a great outlook for stocks. But more importantly, we did have data that came out today. Building permits came in lower than expected at 1.386 million. We were expecting 1.47 million, so less building permits, less potential building, more housing inflation is really the way the markets are looking at that one. Housing starts for the month of May came in at 1.277 million. You were expecting about 110,000 more than that. Housing starts month over month came in at negative 5.5%. The estimate was positive 2.2%. Initial jobless claims came in at 238,000. That was actually slightly higher than what Wall Street was expecting, so more weakness in the labor market. But it really comes down to your Philly Fed data, and this is probably the thing that is causing the biggest market reaction. On one hand, you have the Philly Fed Manufacturing Index on the headline that came in at 1.3. The estimate was 6, so that was much lower than expected. Continuing jobless claims also came in hotter than expected, or, showing more weakening in the economy, in the specifically labor market. And you can see you're kind of ramping up here with continuing jobless claims. But it really was the prices paid component of the Philly Fed that sent Treasury yields up. We'll look at that in just a second. And a really risk-off kind of narrative for most of the markets. You can see Philly Fed prices paid at 22.50. Last month, you were at 18.70. So that's a pretty big jump just from last month, meaning inflationary pressures are still there in that Philly Fed data. Philly Fed new orders came in at -2.2. Last month was -7.9, so a little bit better there. Philly Fed employment at -2.5. Last month was -7.9, so a little bit better there. Philly Fed CapEx index at 12.10. Last month was 20, and Philly Fed business conditions plummeted last month at 32.4. Now you're at 13.8. So data that really doesn't look that good, right? Especially business conditions. But you have inflationary pressures in the prices paid data. At the same time, the labor market looks like it's weakening further. And again, that's not really a good setup for markets. Unless, of course, you are Nvidia, then none of this matters anyways. Nvidia is up 2.65% today, continuing to move higher. There really has yet to be a pullback in Nvidia, but when that happens, it's going to be nasty in markets because everything else has been selling off recently. Liz Ann Saunders on X shared this post that only 1% of stocks in the Russell 2000 are currently at a 52-week high, as small caps continue to struggle to gain traction. When we were entering 2024 in that rally from November through late December that was broad-based and everything really participated, you had almost 15% of Russell 2000 stocks at 52-week highs. Friday's option expiration is worth $5.1 trillion, the biggest ever. And this is also going to add to some volatility today and tomorrow. But what I've noticed is you don't tend to get as much volatility the week of a large option expiration. It's actually the following week when that money repositions into more long bets, more calls, or starts to position into more of a defensive put-based structure on the options chain. Now let's get into more Tesla stock breaking news today. The CEO of Xpeng is visiting the US and said he just tested Tesla's full self-driving V12 3.6 as the software is set to be brought to China this year. Under this post, Elon Musk comments and says the Chinese automakers are by far the most competitive. Tesla Model 3 performance variants are being delivered nationwide in China. Tesla signed a lithium carbonate supply deal with Yoya Group. The period runs from 2025 through 2027. However, the company did not disclose detailed prices or supply in the transaction. BMW has unveiled the 4th generation BMW X3, and Sawyer Maris says the new front grille and interior design are interesting. Definitely interesting, that's for sure. As I mentioned previously, 10-year Treasury yields are up today, up almost 6 basis points to 4.271%. The S&P is up 0.2%, the Dow is up 0.23%, and the Nasdaq is up 0.16%. The Russell is actually up 0.2% as well. The VIX up almost 5% today. So even though indexes are chugging along higher, there's definitely some fear out there with more puts being bought on the S&P 500 than calls, which is actually quite interesting because if you look at the percent of stocks above their 50-day moving average today, you actually are sitting at 39.6% of stocks above their 50-day moving average. Still a really bad number, but it's actually up today. 1.72% of stocks are breaking above their 50-day moving average today. I'm actually surprised that, stocks in aggregate are rising today above their 50-day moving average, but yet the VIX is up 5% today. That may just be a testament to the over $5 trillion of options that expire this Friday, and some of the early positioning that we are seeing definitely looks like it's being positioned in a more defensive way. I mean, after all, how long can Nvidia continue to carry our markets? Nonetheless, sentiment around Tesla stock today is bearish at 44. Yesterday, you were bullish at 55. Message volume is higher today at 48, which is considered normal. Yesterday, you were at 45, which is also considered normal. And the participation ratio is ticking up 1 point today from 54 yesterday to 55 today, which is categorized as high. Option activity today by big money in Tesla stock is quite positive. So far on the scanner, you have 9 different orders totaling $3.34 million with a positive order value of 94%. If you take a look at the call volume expiring by this Friday, you have 60.57% of all option activity being calls today. That's a pretty good number compared to puts at 39.43%. Open interest on the calls and the put side sitting right at about 50% for both of those. So really not a standout, put or call bias for tomorrow. Now, if you take a look at the next following week, you have open interest on the call side of 57.12%, so that looks pretty good. Open interest on the put side of 42.88%, so this is actually a better number than what we are seeing for tomorrow. That is, again, about 50-50 split between puts and calls. Now, if you take a look at the volume today for next Friday's expiration, because let's be honest, a lot of people, when they're going to make a short-term bet, they're going to the next week's, option expiration, not necessarily the one that expires tomorrow, or at least I hope you're not, because wow, that's super risky. On the call side, call volume is 64.29% today. Put volume is 35.71% today. Tesla is still sitting at multi-year highs for short interest of free flow at 3.66%. You have $18.72 billion currently sold short in Tesla, 101.4 million shares that are currently sold short. You do have return shares of 463,000 today, borrowed shares of 1.02 million. That means on net, you're seeing about 556,000 shares that have been sold short today, which makes sense again given Tesla is down about 1% at the time of recording this video. Google Trends data for full self-driving remains stable here at 23, which is a great sign overall. And Google Trends data for the entire Tesla lineup just looks better and better, especially for the Model 3, which is now the Tesla product that is actually getting the interest rate bought down. You've recently risen from 21, 22 on the Model 3 up to now 27. The Model Y is still staying in there strong, bobbing between 30, 31, and now back to 30 again. The Cybertruck's by far the most searched about Tesla product in the last 12 months, with that number currently at 75. The Model X is actually increasing, as well as the Model S. The Model X going from 9 to 10, the Model S going from 11 to 12. So across the board, you are seeing some very strong search trend data for Tesla. And I do think that leads to a better than expected delivery number for Q2, and we'll get that data coming out July 2nd. Tesla continues to run about 4,000 different ads with Google. Global inventory numbers today falling a little bit for the Model Y from about 6,300 down to about 6,100. The Model 3 is back down to about 2,500. Again, the Model S as well as the Model X are falling as well. Model X at 4,200 and the Model S at 3,500. CNN's Fear and Greed Index is sitting right at the beginning of neutral at 45. Really, you could call it neutral, you could call it fear. Either way, still very low relative to a market that has hit 31 new all-time highs in 2024 that is currently sitting at a new all-time high, and so many people are bullish. It's just not being reflected in different metrics like stock price strength in extreme fear, stock price breadth, extreme fear, put and call options, extreme greed, market volatility is neutral, safe haven demand is fear, and junk bond demand, that is fear. I mean, things are just not great out there. Besides market momentum and besides put and call options, everything else looks bad. As far as a technical basis, you really want to see Tesla hold above this trend line at about $183 per share, right where we are right now. Markets are coming down a little bit as we speak, so it's up in the air how today is ultimately going to play out. There's been low volume in our markets. It's summertime. People are away doing things, and I think we just need the next big catalyst to spark up a little bit more volatility and get markets moving more. Now, Tesla specifically, it's doing pretty good. It's well above its 50-day moving average. You're above your 20-day moving average. You're above your 100-day moving average. I mean, what else do you want? You could be above your 200-day moving average, but that's at $208 per share. We need to get July 2nd's delivery number out, as well as earnings, I think, before we can make a run into the 200s. But really, we just want to get above 188 at this point in time. That is like the mystical, magical level of resistance that Tesla keeps bumping into. So that is going to do it for this video. Again, the RSI is pretty neutral. MACD looks good. Nothing has really changed on that front. Volume does look like it's going to come in lower today than what we have seen recently as well. Again, another testament to it being the first day of summer. So you guys have a great rest of your day. If you guys do want to come trade with us live in real time, check out that link down below in the description of this video. Hit the like button, subscribe to the channel, go follow the X account. It's Michael Tyler over there. Put out an interesting piece of opinion that I think everyone needs to hear. If you have not watched the last couple of videos, that is. So you guys have a great rest of your day, and I will see you in the next one.